Hey everyone, it's Zach with Palantir Research. Q2 2023 earnings dropped today, and I'm actually pleasantly surprised at some of the metrics for my own personal goals with investing in Palantir. But as expected, there are things that I am mixed about, but also not necessarily happy with. And some of you may agree or disagree, which is actually great, so we can learn about that. So just quickly glancing at the stock. We actually have a pretty tame movement here in after hours. Of course, during the day, it was quite volatile on the downside, but the price did recover later on. And of course, with hindsight, but now that I see the price action, I'm not too surprised with this kind of reaction in the after hours. Now let's just get into the earnings and I'll go over guidance, the $1 billion buyback too, and all my thoughts at the end as well. So of course, top of the page headline, we know Palantir is GAAP profitable by 1 cent, and that's Palantir's third consecutive quarter of GAAP profitability. So there's no surprise here. Basically on their way to meeting the requirements of the S&P. And just note, even though you meet the requirements, they may not actually include you for a while. So just keep that in mind. For long-term growth, I don't necessarily care if this expands more at more than 1 cent because I'm confident they can just pull the levers easily, as you'll see below with the things that I'll explain that can widen this. And that's when they need to do that. And moving on now, here's the financials I want to point out. Revenue growth of only 13% first. So yes, they beat their guidance from Q1 2023's earning report where the range was $528 million to $532 million. So they barely beat that range. I was wishing for them to get closer to that 18% growth rate. But it's not necessarily the make or break it for me in other leading indicators, which there are several points I'll go over later, and that pleasantly surprised me. But either way, we get $533 million in revenue for a single quarter, which shows over multiple years that Palantir is a growing company. Now, what's met to me next is the growth of commercial revenue, and specifically U.S. commercial revenue. So don't get me wrong, we're still growing here, but the growth rate is slowing. And for reference in Q1 2023, the growth rate of 26% was there for the year over year. So I was at least hoping for a 23, maybe 22, 24% growth rate for Q2, not a drop down to 20% for U.S. commercial, because that's supposed to be the bright spot for the company. But like I said, I can forgive this, as you'll see later. Now, what was a pleasant surprise talking about revenue and was a very big surprise to me was the international government revenue growth of 31%. This is excellent and really very unexpected to me personally to start seeing now and does give me hope abroad. But keep in mind, commercial revenue as a whole grew 10%. With U.S. commercial, 20%. So the international commercial side is pretty abysmal if you want to ask. Now, of course, this is probably due to maybe NATO, increased interest in countries that are aligned with that, and of course, the war in Ukraine. But either way, I am very bright there. Now, my favorite metric right now, since it's a leading indicator, is customer growth, and that's the customer count. So they had a 38% year-over-year growth. But actually, the 8% quarter-over-quarter growth sequentially made me happiest. Customer count is the first leading indicator in my books, as I was alluding to when talking about revenue. Obviously, this is pushed by commercial because they experienced a big jump from 119 to 161 a year ago. And bringing up the chart here, this is what I like the most, a consecutive quarter growth by 8%, which is an increase from the previous 7% increase. Now, remember, with the sequentials, you're working off a much higher base number you're growing from. So if you're doing a year over year, it tends to be higher, of course. So if this is a stabilization of the customer growth rate or the turning point, which will take a couple of quarters to confirm, then this would be the most optimistic part of the earnings that gives me confidence. And remember too, AIP was announced kind of in the middle of Q2, so there was still time for them to be cut off and not necessarily get all the customers in now. If all the interest is still drummed up and now we have a full quarter of Q3, which is still going on, I need to see the sequential growth rate stabilize or even higher to really believe AIP is that growth engine for Palantir. But either way, we have a nice early sign here. And while on this slide too, look at the billings, which is defined as revenue plus the change in contract liabilities for the period presented. Basically, you want it higher, and for Q2 year over year, we grew 52%. That is massive. Considering if you look at Q1 2023's presentation, that was only a 25% year over year growth rate. Now, sequentially, you're going to see from Q1 2023 to Q2 2023, it's a slight decrease from $614 million to $603 million. Now, if you compare in Q2 2022, that was $490 million in billings in Q1 2022, but then it dropped all the way down to $396 million for that Q2. So it pays to look that customers are signing up and putting in more money for them. So this is a huge deal here. And then jumping to the balance sheet here, just to pound the point home with more, pretty much think of the future kind of business for Palantir, right? No one's going to get all that revenue recognized right up front because as a software company, that's not how you do it. Their jump in customer deposits, at least under current, has healthily climbed to $184 million from $142 a year ago. But also sequentially last quarter, it was only $139 million, so it's still growing here. So this jump in signing customers is real and showing up with these pre-signs. And then similar for deferred revenue, we have $260 million jumping from $183 million. And also sequentially, it's still a jump from that $230 million. So overall, we're going in the right direction. And this will be brief also. While we're on the balance sheet, we know the operating cash flow wasn't as high at $90 million. I mean, that's not as good as I didn't like. That's less than half sequentially. But either way, I've laid out these points above that kind of offset this for me. But jumping down now to the income statement, here's the point I like as well. Palantir has shown stronger evidence that they're scalable. Look at the gross profit growing where their cost of revenue has basically stayed flat or hasn't grown that much. But look at the quarterly and also the half-year comparison. You'll see that the growing revenue comes here even though their expenses are staying that flat. So it continues to expand their gross profit, which does ultimately expand their income from operations, which I'm happy with at $10 million still, where their last quarter was at $4 million in Q1. As this continues to expand, this means more flexibility in how they invest in sales and marketing, R&D, and of course G&A. But you can already see Palantir has emphasized, at least for the first two, to continuing while lowering their G&A costs, which I agree as a shareholder, that's fine. And I like this chart because of the trend, very positive for me, and definitely the strongest evidence of a scalable business. Now, the last metric before my thoughts on guidance and the buyback, this one made me also pleasantly surprised, net dollar retention. Last quarter, remember, we were at 111% for Q1 2023. Now, it's been dropping faster each quarter, and we finally see a slowdown here at 110%. And remember, we're working off a larger base as time moves on each quarter. So what does this mean? Palantir has great products and has the power to not only retain customers, but raise prices, or in a nicer way to think of it that's more customer-centric, is provide much more value to existing customers that they are willing to pay them more, and of course not leave them. So yeah, that was a lot there, but let's go over the elephants in the room. Guidance first for Q3 2023. We get growth of $553 million to $557 million, which is very slim. So it sounds like they kind of have a target of what they're probably going to get. And of course, they're going to be GAAP profitable for their net income. Nothing much to say here because even if you try to argue sandbagging, this quarter at least, they pretty much just eked a tiny above that guidance from before. But either way, long-term as a business, it's still great to see them growing here and being happy with these above $500 million quarters. Now, for the level of growth, referencing Q3 2022 at $478 million in revenue, if they hit $557 million, that's a growth rate of 16.5%. It's better than now, of course, at that 13%. So I'll be praying that they can actually exceed this. And of course, if this is a turning point here, that will be great for the future. Now, for the full year of guidance, they raised it for revenue to an excess of $2.212 billion. But if you look at Q1, their full year guidance was $2.185 to $2.235 billion. So it is basically in the middle of last guidance, but they do emphasize it'll be in excess of this. So it means that they're very, very confident that they will at least get this. Well, I would hope so at least. And they were going to exceed, of course, the bottom end of the previous guidance. So it doesn't make me overly excited, but it's very positive still. And now the share buybacks, which is the biggest elephant here, I'm mixed. I know there are people who will love this, but also hate this, and definitely understand both sides here. $1 billion of repurchasing stock has been authorized. So as a long-term shareholder for a growth company that you would like, this is not my priority for capital. But also sitting in treasuries isn't either, and that's what they've been doing pretty much. So we know Palantir is around $3.1 billion in cash and cash equivalents, with most of that just sitting. So I like how lean the company is, of course, and our expenses, and we saw that with their operating expenses, especially on the G&A side. But if R&D and marketing sets up the company for longer-term success, I'm willing to wait and spend the money on that if you can get a higher rate of return. And I know for shareholders now and Wall Street, this is almost always a positive sign to buy back your shares. But with the valuation of shares now in the open market, you could argue, why didn't we buy shares below $10? I mean, the beauty of it also is that this is not some dude just randomly choosing to buy, of course. So it's going to be averaged over time. So I'm sure Palantir expects some stabilization in their price and, of course, market cap. So when they're buying back shares, it's not like they're just buying it at the peak. But that, of course, is still to be seen. So long story short, I'm not in love with the share buybacks, but I get why they probably did it for the optics and also to show investors confidence in their business to produce more cash. I mean, either way, I can't complain though, I guess, since I'll technically own a larger share of the company over time, so it only benefits me. And of course, combined with the leading metrics that I was pleasantly surprised with, customer count, billings, and deferred revenue, plus the others of net dollar retention and operating income, I really can't complain too much. But I'm definitely using my own biases and perspectives concerning personally, I have a much longer term perspective, which takes into account the qualitative variables as well, like their products, the stickiness, the mission, industry scalability, all of that stuff. But these are what stood out to me for this latest earnings. Do you agree or disagree with my thoughts on this? Let me know below, and I'll see you in the next video.